You've been banking at the same institution for years, maybe even decades, possibly even generationally. You've expanded your personal relationship with them. You've even branched out to a business relationship with them, running your deposits through maybe even a couple of credit cards. You've really gotten entrenched with this institution. You finally go to apply for that first business loan after all those years, all those deposits, and you get declined. You immediately feel betrayed. I want to give you context in this video to get you to understand that your relationship does matter. It just doesn't matter the way that you think it does. So in this video, I'm going to be giving you the context you need to put things in proper perspective, understand what banks are actually looking at, and to understand how to leverage your relationship and how to build it effectively so it does get you the outcome that you're looking for. For those of you who are new to the channel, welcome to the invitation. I'm going to be your business banker and your capital strategist. So relationship does matter. That's going to be the first talking point that we're going to be focused on in this video. I'm not going to sit here and tell you relationship doesn't matter, because it does, okay? It just doesn't replace underwriting. It doesn't, all right? You can bank as long as you want at a financial institution. The variables and metrics that are plugged into underwriting that you need to meet to get qualified are not automatically filled or smoothed over just by how many years you've been banking there or how many deposits you've run through that account, okay? What business owners tend to think about banks evaluating them. This is what we tend to think as business owners when we've been banking somewhere for a long period of time, okay? We assume that they measure for time with the banking relationship, all right? So time with the bank, number of deposits, loyalty, average balances, and friendly relationship. You've never overdrafted. You've never gotten, into a negative confrontation with any staff. You've been a great client. You've been pleasant to deal with. In your mind, that's enough. What banks actually evaluate, this is where it gets important, all right? Revenue, cash flow, debt obligations, personal credit, business credit, liquidity, collateral, industry risk, time in business, ability to repay. Your relationship helps open the doors. Underwriting determines whether you walk through them. This makes sense so far? So let's dispel another portion of this. Why deposits alone aren't enough. This is going to make sense to you once I break it down, so stay tuned for a second. A business could deposit $2 million and still be losing money every single month. Think about what I just said. The banks lend against repayment ability, not deposits. Repayment ability, not deposits, okay? So revenue is vanity. It looks good. It matters. But underneath that is cash flow is reality. That's the true truth teller. That's the storyteller. Cash flow. Deposits are great, but at the end of the day, that's not enough for any financial institution that wants to keep its doors open long term to lean on by itself. Why years with the bank aren't enough? This is another portion of this conversation. 15 years as a banker, I can tell you firsthand, this is one of the biggest complaints I get from clients when I have to deliver the news that they didn't get approved for something. The first thing they talk about is how long they've been with us, how many deposits they've run through. I get it. All right. Let me help give you some clarity in this video. So you've never borrowed with them. Maybe you've been banking there for 20 years. Whatever reasons, you've never borrowed or you borrowed thinly with them. Never built financial statements. So you never really pulled together your financial track record. Never show profitability if you got a business relationship. Never improved your credit. You've been in this flat or stagnant place the entire time. Time doesn't reduce lending risk. Financial strength does. I understand how connected you feel when you've invested time into anything, but your timing with that bank is only a part of the pie. The larger equation is these metrics that we're going through here, your overall financials underneath. What have you been doing with that time? What have you been building? That's what the bank is going to be considering, okay? So let's not get discouraged. Let's look at the upside of this. When relationships actually do help, all right? Business banker advocating internally. That's the equivalent of me saying, no, this is this client's actual picture. When I submit this application and I have an opportunity as a business banker, relationship manager, or commercial lender to say, no, this client's actually pretty solid. Here's some additional details. Let me paint the picture for you. I understand that they look like they don't have this or this might be missing. This is what's actually going on here. That advocating can actually turn the knob, get an underwriter to think or ask more questions, and turn an automatic denial into a deeply considered approval or maybe even a counter offer. Okay. Faster responses because you have a strong existing relationship. Product recommendations. The longer you've been banking with us, the better we can recommend products that generate data that we need to feel more comfortable with you while giving you the financial tools that you need to advance your finances. Fee waivers, relationship pricing. This is a big one. So imagine getting a discount on your rate because of your banking relationship. The cost of capital is huge when borrowing money. If it can be reduced for the depth of your banking relationship, isn't that a beautiful bonus? Introduction to SBA specialists. So getting directly connected with the top form of capital a business owner could ever get their hands on, generally speaking. Private banking referrals, commercial bank referrals, early warnings when new programs launch. Examples is if a bank normally asks for 2 years of full financials and documentation and decides to roll out a program to reach other business owners in the community that normally don't have those underwriting variables and say, you know what, if you've been banking with us for 1 year and you've been running all your business deposits through us, you have a strong business banking relationship, we will take your application without any tax returns or additional documentation and evaluate you from your banking relationship and your cash flow and your personal credit. Maybe they say you have a 680 threshold requirement. If you have that and a strong business banking relationship with us for a year, we will take your application. That's something you're going to want to be aware of while it's rolled out and while the funding that's allocated to that is available, right? All of us can think back to the COVID time frame when the PPP money was coming around that was legitimately applied for. That money didn't last forever. And a lot of the people who got access to that capital were already established close-knit relationships with business conglomerates, business relationships, SBA lenders. All of these relationships were already together. So the bankers and the lenders get paid in this process. We get paid. So of course we're reaching out to our clients like, hey, I wanted to let you know this is out here and available, and I think you might be approved for it, or I think you have a good shot at it. I think your odds are high, or this could be useful for you, okay? So that's just another example. How to build a relationship banks actually value. This is where a lot of us fall short. We think about time, we think about deposits ran, we care not, or at least we're unaware, maybe let me be fair, we're unaware of what's really being evaluated and valuable to the bank with these relationships, okay? So this is where this becomes actionable. Use treasury services. For those of you who are unfamiliar with the hell that is, that's cash flow management tools. Tools and resources at that bank that helps your money flow in and out effectively. Pay things and get paid effectively. Maintain deposits, merchant services. This is kind of a derivative or a spinoff of treasury services. So specifically, usually electronic services. So think invoicing, ACH, taking credit and debit card payments. That's usually considered payment solutions or merchant services. So these are things that banks really care about within your relationship that you set up. Build recurring revenue. They love cash flow. Communicate with bankers before needing money. Build a relationship with a banker on a one-to-one basis where you can tell your story the entire time and position yourself before you're desperate. Very important. Maintain personal credit, improve cash flow, borrow strategically when it makes sense and it can help you grow or stabilize. Repay successfully. Bring more of your business to one institution when it makes sense. Stop taking $5,000 and spreading it out at 10 different banks at $500 a piece. Stop doing that. Concentration gets you results. Find one or two institutions that have the product, services, and the relationship and access that you need, and pour your resources in there until your pot grows bigger and you can afford to take on more relationships. Don't bite off more than you can chew. So the biggest mistake business owners make isn't choosing the wrong bank. It's expecting a relationship to replace strong loan application, features, data points. Very, very bad mistake. The best relationships don't eliminate underwriting. They help you become more prepared for it. Please comment preparation down below and let me know you had the attention span and the willingness to invest in yourself to stick this video out and get the insights and the nuggets that were all across this video. Put preparation in the comment section down below right now. Get in the description section down below and the about section to learn more about me, my professional career, and this channel was named after my book. So again, welcome to the invitation. Links to my book in the description section down below. If you really want to drive this content all the way home and complement it, getting my book will help open your eyes, give you the insight and the advantages of understanding how banks, credit, and capital all come together, how to build a relationship that's cohesive with the banks, how to build and leverage your credit effectively and what banks are looking at with your credit, and how all this ties into capital stacking, capital strategies. That's what my book gives you an overview about. That's what this channel was born from. So please get in the description section, the about section down below. Learn more about me as a professional without me running my mouth all video telling you who I am and what I do. And get in the description section down below so you can tie in and get the edge and the advantage of my book, The Invitation. Other than that, like, comment, share, subscribe, support this channel so the channel can continue to support you. I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.